G'day folks, welcome back to another update for natural gas and its ETFs. Now the gas price is still pulling back towards a declining trend line. So I'll have a look at that in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today's February 1st, 2025, the natural gas market is experiencing heightened demand driven by the rapid expansion of AI-powered data centers, which are projected to account for about 19% of data center power consumption by 2028. This surge is anticipated to increase natural gas demand by over 3 billion cubic feet per day by the end of the decade. In response, companies like Chevron and GE Vernova are investing in natural gas power plants to support data center operations. With regards to the ETFs and the investment vehicles, ProShares Ultra Bloomberg Natural Gas (BOIL) seeks to provide twice the daily performance of natural gas futures, while ProShares Ultra Short Bloomberg (KOLD) aims for twice the inverse daily performance. The United States Natural Gas Fund, UNG, offers exposure to natural gas futures without leverage. Investors should exercise caution with leveraged ETFs like BOIL and KOLD due to potential volatility and decay over time. So for the natural gas commodity price, we always look at the long-term trends, and for those new to the channel, we look at the monthly, the weekly and the daily first. And we also got these multiple moving averages, which are available in the description below in a separate video to learn how to draw those on your own charting software. So here, for example, on the monthly, the CCI is broken above the moving average band, giving us a bullish signal. Likewise, the price. So that's been bullish now since late 2024 on the monthly. On the weekly, that's also been bullish now, again, since April 2024. A couple of dips here around about July. And currently, it's actually broken into that moving average range, giving us a neutral signal on both the CCI and the price. So the CCI is moving in line with the price. There's no divergence currently. Although back here, you'll notice we had a bearish divergence, lower highs on the CCI versus higher highs on the price. That pullback hit our minimum target range. That's a 23-38% minimum range. So if I draw a Fibonacci back to that level, there, that's the 23-38% Fibonacci range. Now if I extended that down to that significant low there, you can see there it fell right down to about the 100% retrace level. So these retraces, these divergence, could be a small bounce into this minimum range and then bounce, or they could do what it's done back here. So it's unknown how far they're going to drop. More often than not, they actually bounce around the retrace level here and they bounce out again. Also notice as well, let me just get rid of the Fibonacci. We had a very narrow, if I zoom in, we had a very narrow bullish divergence here on the CCI versus lower lows on the price. And these narrow divergence often have a more volatile reaction in terms of price movement. You can see here, if I drew a Fibonacci to that level, that went well beyond the 100% retrace level. So that would have been a really nice buying opportunity on that one. And again, this is on the weekly chart. So on the daily, remember, we only go in the direction of the higher time frame, so that would have been coincided with a bullish move there on the monthly. That was back in May 2020 actually. So we go back to 2020. Yeah, you can see there that would have been that period there. If we go back to the daily, now what I've done here is I've drawn a resistance up here at 40.60. It's bounced off that once, and also these diagonal ascending and descending trend lines. It did gravitate towards this ascending trend line initially, then it finally broke through this minor horizontal support at 32.16, and looks like it's currently going to come back towards this descending diagonal trend line. Hasn't reached it yet, but notice the CCI is still dropping fairly sharply. There's no sign yet of a pullback on the daily. So to get a finer view of that, and by the way, we did also have this almost a double top on the CCI versus higher highs in the price, and that actually pulled back in line with that. And if we draw a Fibonacci on that one, now we could take it back to that level. You can see it broke right through that 61%, or if we took it back to that level, it's actually currently sitting around the 50% level of a retrace. Looks like it may well fall further, so again, we'll keep an eye on it. Most likely it'll come back towards this descending trend line. To look at the micro chart as well, so even if you're trading on the daily, we still want to look at the micro charts, because this is gives you a bit more insight into potential reversals using divergence. And this is the 1 hour chart. So here we had a first bullish divergence here between that period there, bounced, hit our target, and since then it's actually dropped further with a rising CCI. So that was a higher lows on the CCI with a declining lows on the price. So again, if we draw a Fibonacci between that low and take it back to that level, again, you can expect it to hit at the minimum that 38% level. Even if you take it back to the that high there, not much difference. So you just raise it a few points above that, and that most likely may come back towards this support line probably, or now it's currently a resistance. But notice the CCI is moving higher ever so slightly, so we may see further upside in the short term. Again, don't go long. The strategy is we only go in a direction of the higher time frame, so we only take short trades on the intraday if you're trading the intraday. Next, we look at BOIL, one of the ETFs. Now, there's no CCI for it on the monthly, although the price is well below its moving average, giving us a bearish outlook. On the weekly, we did have this bullish and still have this bullish divergence, higher lows on the CCI versus lower lows on the price. Now, it's making some move to the upside, but notice we've got a bit of a pullback last week, so it's coming back towards the moving average range. So cautiously, on the daily, I'd be going long very, very cautiously. On the daily, we do have this, we did have this bullish divergence versus lower lows on the price, and that actually bounced. Now currently it's bounced off this resistance up there at 80.01, and it's pulled back again below the moving average band, and also below the CCI moving average band as well, so giving us a bearish outlook on the daily chart. Now if we go to the intraday chart, we only take short trades as per the daily. You can see there it's broken through this, we drew this diagonal ascending trend line, it's broken through that trend line, and it looks like the CCI is still falling, although it's currently in the moving average range. We might see a bit of a pullback, but at the moment we only take short trades. And the way you trade this on the short side during this period, you take trades, let me draw a ruler. So more recently you would have taken a position there when that CCI broke below the moving average band, and the candle was also below the moving average of the price chart, and you close it out when that CCI breaks into that moving average band. So you would have closed it out on that candle there on the close. So that would have been on the close, which would have been down there. So that would have returned just under 5% in 9 hours of trade. There was another point here that was, let me draw another ruler. So that would have been a break on the CCI, fresh breakout at that point there. So you would have taken a short entry there and close out the position on the close of that candle. So that would have returned 7.2% in 16 hours of trade, and so on. So that's how you trade on all time frames in the direction of the higher time frame. So for KOLD, no CCI for it on a monthly, although notice it was bullish for a number of months, and it's finally broken below the moving average band, giving us a bearish outlook. The weekly has also been very strongly bearish for a number of weeks now, although it's making, in the last week, it's made a bit of a retrace to the upside. There's no divergence on either of those. On the daily, it's bounced off this support at 27.80, and it's still heading higher. We've got a fresh breakout to the upside on the daily, so which means you can take long trades on the intraday if that's your preference. So again, the price is broken above the moving average, and so is the CCI. And again, there are no divergence currently. There was a bearish divergence back here, lower highs on the CCI versus higher highs on the price, pull back, hit our minimum target, and this one looks like it went as far as the probably around the 60% level. Again, highlighting, notice these little narrow divergence are generally a lot more volatile in terms of their price action compared to the longer ones. So if you see these little narrow divergence, now this is strictly not that's almost a double bottom, so I'll consider that a bullish divergence versus the CCI on the price, and that bounced quite strongly, well beyond 100% retrace level from that point there. So at the moment, bullish trades on the intraday. Going to the intraday chart, so back there from around the 27th of January, from this period here, you would have taken a long entry and you close it out. So just very quickly highlight that point there. You would have taken a long entry there and close it out when that CCI breaks into that moving average band on that candle. So on the hourly, you would have made a 6% gain in 17 hours of trade. More recently, you would have gone long again there, and you would have closed it out on that candle, say a 3.8% gain in 11 hours of trade. Notice as well here we had a bullish divergence on the hourly, higher lows on the CCI versus lower lows on the price. That bounce hit our minimum target range, and that minimum, let me just draw a Fibonacci for you, you would have gone back to that recent high. That's at 38% level. So it's actually currently sitting around the 38% level. This could actually break to the downside again, so just be careful. So long as that daily is bullish, then you can take a long trade. So if that breaks higher on the hourly, then you can take a fresh long trade. again. So that could go a lot higher, or could go against, could reverse back down again. We can't really tell. We don't have a crystal ball. So that's KOLD. And lastly, we'll look at UNG. So on the monthly, this one's got a CCI drawn, a fresh breakout to the upside on the monthly chart. Although the CCI, the price is still below its moving average, we could cautiously go long on the weekly if you're trading that. On the weekly, we do have this bullish divergence, and that's still in an upswing on a bullish trend, even though we've had a bearish week last week. So notice the CCI is still above its moving average range. But notice as well, we always look at the smaller charts as well in reference to the higher time frame to see what's happening. So on the daily, so even though I said you could possibly go long on the weekly, but again, focus on the daily. I'd like to see this break to the upside as well to help the weekly move higher. On the daily, you can see there it's broken, both the price and the CCI broken below the moving average band. There is no divergence to talk of. If I zoom out, last divergence we had was back here, a bullish movement versus bearish movement on the price. Bounce hit our minimum target range. That's what I mean by we can't tell where it's going to stop. In this case, it stopped in at 23.38% level, and it bounced back down again. So don't trade the divergence. I use them as an exit, one sign as a potential exit signal. So in this case, if you're going short and you started seeing a divergence, and that would have been your first point of reference between that point and that point versus that point and that point, that was your first sign there was a bullish divergence. So if you're going short during this period on the daily, then you may want to start considering taking your profits off the table if you're going short, because this is possibly indicating a bounce at some point. And again, the bounce may be just this minimal 23-38% level. It doesn't mean a full-scale reversal. So always have that in mind. And that's why I don't trade these, because I don't know how far it's going to go. So again, on the daily, we're bearish. So if we go to the micro charts, this is the 1 hour chart, taking only short trades. Again, we had a bearish divergence here versus high highs on the price, broke down, hit our minimum target, and broke through that diagonal trend line. And you'll notice here the CCI is still falling, although it's broken into that moving average range. Similar to the previous chart, again, you would have taken a short entry more recently. You would have taken a short entry on that one. Let me draw that on that candle, and you close it out at the close of that candle. So that was a roughly a 2.3% gain in 11 hours of trade. Another short entry on that one, and you close it out on the close of that candle. That was a 3.2% gain, almost a 3.3 on a 16-hour trade. That would have been closing that, or opening up a position on that candle. That would have been a close there, and you close it out. Now this would have been a loss or a break even. It was a 0.4% gain in 7 hours of trade. That was a break even, I'd call it. Don't trade long, because we're going short, don't forget. And that would have been your trade back here. You could have taken a short entry when it's in that moving average range, but again, I'd like to wait for it to break below the moving average band at that point. And I would have closed it out on the close of that candle. So 4.1% gain in 11 hours of trade. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.